Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have back the CEO, Andrew White from Char Technologies. As a reminder, Char Technologies trades on the TSX Venture Exchange under the symbol YES, and it also trades on the OTC under CTRNF. The company is currently trading at 77 cents with roughly 83 million shares outstanding, or about a $64 million market cap. I'd now like to hand it over to Paul Andriola.
Awesome. Thanks, Trevor. Andrew, good to have you back. It's been, I think, I checked about 6 months since we last spoke. You guys have clearly been very busy in that 6 months. Lots of stuff to talk about, lots of stuff to get updated on, including some really recent stuff that's pretty exciting. Before we jump into that, why don't you just refresh everybody's memory in terms of what Char does, and then we can get into some updates.
Yeah, absolutely. And Paul, it's always a pleasure to speak. So I'm glad you're able to have me back here. So for those who don't know, or those who want the refresher, Char's core technology is called high temperature pyrolysis, but really all that means is we're heating things up in the absence of oxygen. So high temperatures, 850, 900 degrees Celsius. Pyrolysis just means without oxygen. So, we put material in a big tube. We heat it up without oxygen, and what that does is it cracks it apart into kind of its elemental pieces. One is a fixed carbon. We call it biocarbon, which has further applications as a biocoal. So that's a metallurgical coal replacement. The other is a gas, and that gas we can either extract green hydrogen from, or we can process it into what's called renewable natural gas. Primarily our feedstocks we're looking at are wood residuals. So in our Southern Ontario project, Thorold, which we'll talk about no doubt, we're using things like used shipping pallets, so end-of-life wood. Some of our Northern Ontario projects in Northern Quebec, Lake Nipigon, Kirkland Lake, Saint Félicien, those are using what are called forestry residuals. So these are either harvesting residuals, so the tops of the trees or the tree branches, or processing residuals, so things like bark and sawdust and the like.
Fantastic. Okay, so let's jump right into it. So you've been generating a fair bit of interest from governments to fund some of these projects you're working on. Why don't we talk about some of the things that have happened over the last 6 months in terms of funding, and then we can sort of jump into I'd almost say the more exciting piece of funding that you just announced. But let's take us back 6 months and start from there.
Yeah, so sort of 6-7 months ago, we were able to announce a pretty substantive government funding package. So it was from both the Canadian federal government through a program called iFit and FedDev, and then the provincial government through a program called FSIP. But basically, iFit and FSIP are both forestry innovation programs. And so between the three programs, we brought in just under 14 million in funding, most of it being non-dilutive, which is always great, and then a smaller part of it being repayable at some pretty favorable terms. And that money all came in to support the expansion of our Thorold, Ontario facility, to move it up from the scale we are, from a demonstration scale, to being a larger production unit. And larger production means we're making 10,000 tons, or we will be making, 10,000 tons a year of biocoal for steelmaking, and about 500,000 gigajoules of renewable natural gas, which is roughly the consumption of 5,500 standard Ontario homes.
Fantastic. Okay, so that's the government funding piece, but recently you guys announced a deal with ArcelorMittal, if I'm not mistaken, the largest steel manufacturer in the world. What can you tell us about this deal?
Yeah, so ArcelorMittal, we announced last week. It's fantastic. So they're corporately investing 6.6 million Canadian into Char. That's the first really important piece. And then the second is it comes with a guaranteed offtake agreement for the biocoal we're producing in Thorold to go to ArcelorMittal Dofasco, which is their steel facility in Hamilton, Ontario. And so we've made previous announcements of working with the steel industry and working with Dofasco. So we've been working with them since 2017, really in development work, where I think we're now sort of the reliable go-to on biocarbon knowledge for ArcelorMittal, which is a fantastic position to be in. And we've been working collaboratively with them. So on this funding, even, you know, we really started engaging in August. So much like the government funding, the amount of due diligence that we've gone through from the government, federal government, provincial government, and ArcelorMittal, I think gives a huge stamp of credibility in that, you know, we've gone through the due diligence. We've shown the business case makes a ton of sense. We've shown the technology is viable and works. And certainly having Arcelor on board is an awesome next step of that validation journey.
Yeah, clearly, I was going to say validation is the word to use here. Hard to get a much better validator than a company like this. You mentioned offtake. Like, can you give us a sense of? I mean, are they taking a certain percentage of your capacity, or, you know, what can you tell us about how much they're looking to purchase from you?
Yeah, so they will be purchasing all of the production from our commercial facility, or yeah, our commercial production. So, you know, our Thorold plant, we're going to continue to run this demo kiln, and then we're going to expand the commercial. So we'll still have some flexibility to produce different types of carbons out of the demo kiln, but they've signed up to take our commercial production.
Wow. Okay, so let's talk about Thorold. What's the schedule look? What's the timing look like? What can you tell us about when you think that'll be, you know, the different phases that's going through construction, and when it'll be up and running?
Yeah, and one of the really great things I think about the modularity approach that we take. So our kilns are modular, so they're the same size system. So in Thorold, we're installing two. Is we are into procurement for the equipment, and we expect that first kiln to be delivered and to start commissioning this fall, with initial carbon production towards the end of 23 into early 24. And so that's a pretty quick timeline, and some people may feel, you know, skeptical around it, but, you know, we've already got our permits in place, so our environmental permits, our operating permits are all in place. And our demo kiln, same concept of modularity, but it's a little smaller. The second week of November, we were running it in London, Ontario. And then the second week of January, we had it running in Thorold. So, you know, I think we've shown we can get this modular equipment delivered and commissioned in a fairly quick and speedy amount of time.
I want to remind everybody that's listening, if you got a question you'd like me to ask Andrew, as usual, you know, please use the chat function and we'll ask the questions. I mean, it seems pretty obvious now. You guys are continuing to de-risk this sort of opportunity. And I'm sure nothing is smooth, but what sort of challenges you're still facing? What do you still want to see here in the coming months?
Yeah, I think the last piece really of de-risking, well, there's two last pieces of de-risking. One is to finalize our offtake agreement for the RNG, which we're working really hard on. That will continue to de-risk on the offtake, because then we have both the carbon and the gas sold. And historically, you know, the Canadian gas utilities, primarily still Fortis in BC and Énergir in Quebec, will sign up to buy gas from anywhere for these 20-year offtakes at a really nice premium. So that, for us commercially, is the last piece of the de-risking puzzle. Then we'll have feedstock from Walker Environmental secured. We'll have our biocarbon offtake, and we'll have our gas offtake. So the other piece of de-risking is, of course, having this plant operating. And what that for us will really do is open the door for projects 2, 3, and 4 to be much easier to finance using more traditional project financing avenues, because now we've got the technology demonstrated at the same scale, plus all the offtakes. So yeah, it's absolutely been a de-risking journey, and we're quite far along it.
Definitely. Let's talk about the stock a little bit, or maybe the capital markets. You know, the ESG and the environmental sort of environmentally better, you know, businesses that are out there are probably a little more challenged, but you guys are an outlier here. Stocks hitting 52-week highs. Clearly you're getting capital, you know, in different forms here. But what if anything, what kind of dialogue are you having with other investors, whether it's institutional or non-institutional investors? Just what kind of pushbacks are you seeing, or what kind of dialogue are you having with these investors?
Yeah, and at this time, you know, with the investment from Arcelor and with the government funding, you know, we're not out there actively raising money. So our conversations are similar to what we're having here, is, you know, just going out and making sure we're telling our story. I think now, if you kind of look back at all the calls we've had with small cap discoveries, you know, on the first call, you know, we said we were going to do something, and you know, the second call we did it, and I think just building that track record of executing on what we say we're going to execute on is really beneficial to us at this point. So yeah, you know, we're going out, we're talking about the story, we're telling people what's next and what we've done, and I think we're getting very, you know, positive and pretty enthusiastic feedback. You know, certainly we're looking to set the stage for, you know, project level, you know, facilities, and how do we, you know, start to have those conversations. So as Thorold comes online, we can quickly move to get the project level financing coordinated. But you know, I think based on as you said, our outlier position, you know, we've been telling the market, which I think right now is a little bit less about hype and more about substance, maybe the way to put it.
Yeah.
And I think we're demonstrating that, you know, we are there, we're real, what we're doing is real, and I think we're getting the rewards for that right now.
I'm going to go back to ArcelorMittal. I mean, they've got facilities all over the world. Is it okay for investors to sort of read into maybe there's opportunities outside of just this one facility, or is this sort of a wait and see?
Yeah, I mean, if you look at just their Canadian facilities, if we're looking to convert them all to biocoal, it's a pretty substantial amount of material. So, you know, what I can say is certainly ArcelorMittal has a global decarbonization strategy. As we've presented previously in our investor decks, from their climate action report, they identified pyrolysis, which is our technology, as a key element for that decarbonization pathway. Just on the quick technical elements, it's because the chemistry of steelmaking needs solid carbon. So they're not just burning our biocoal for heat, you know, it's going in as an ingredient. And so even at more advanced steelmaking that is much lower GHG intensive still needs a component of solid carbon in those systems. So that is certainly where we are. And you know, I can repeat for those who maybe didn't read the article in the Globe and Mail, Irina, who is the head of the XCarb and in the M&A group at Arcelor Global, you know, did say, you know, historically they do make larger investments once they've made their initial investment. Of course, that's a case-by-case basis, and you know, we haven't really talked about any additional financings or additional European projects, but you know, certainly we execute as we have been through Thorold. I think those opportunities are certainly there.
Yeah, no, exactly. There's a big sort of roadmap that's already been showcased elsewhere. Let's look even further ahead now. I think maybe a lot of investors have a real hard time grappling with what the addressable market is here for your, I guess, your two key products. But can you give us a sense of what happens next? Like, let's assume you're successful in getting the facilities that you're currently talking about right now up and running. What's the next big challenge for you guys as far as expansion?
Yeah, I mean the next big challenge is to keep the development pace that we want to keep. So our short medium term goal is to be producing 3 million gigajoules of renewable natural gas. The next three of our next four projects will get us to half of that capacity. So between Thorold, Lake Nipigon, Kirkland Lake, those will all be RNG. St. Felician is slightly different. So between those three, it's 1.5 million gigajoules. Now to kind of help put that in a context of addressable market and why that's an interesting number is BP about a year ago now, I think it's pushing a year now, bought Archaea Energy for $4.1 billion. And they were making 3 million gigajoules. So we'll be half the capacity of Archaea in the next couple of years. And that's the valuation that, kind of the large players will put on that kind of production. So for us, that's obviously really exciting, and it's making sure that we're able to meet these development targets we've set for ourselves as we continue to grow. But we're doing it again with the modular equipment, so the plants are cookie cutter. We're staying in jurisdictions that are related to each other. So permitting in Ontario and Quebec are, there's some nuanced difference, but we're not trying to permit plants in Ontario and then in France or Italy yet. We're really focused on areas that are addressable to us, that we can move quickly on. We can get market share and we can get to these production levels.
Perfect. So you're right. I mean, I think since we've started talking to you, you've always sort of given us some deliverables, and to date, I think you've hit every single deliverable you spoke to so far. So let's have some more deliverables. What should we watch for? What do you think are the critical things that investors should pay attention to going forward?
Yeah, I mean, so the next piece, as we were talking about from a de-risking perspective, certainly having agreements with gas utilities for the Thorold site to start with, and then the other sites will be a really important step, and it takes some time and effort, and we're well along our way there. Delivering on Thorold will also be a key element. We need to get the equipment there installed, running as we go through this phased approach of, first producing carbon because we can, and then as we install the gas processing equipment, getting that into the grid. And then, really getting our project development pathway funded for our additional projects. So, that means the upfront development work is things like the engineering design, site design and layout, and permitting applications. And so we're working to get that all lined up as well.
Perfect. I think we've covered most of the updates unless we've missed anything. Is there anything else you want to bring up? And if not, what do you want to make sure everybody walks away with today knowing?
Yeah, I mean, I think the important message today is certainly, I can't understate the overall value of the Arcelor investment being much more than the 6.6 million that they brought to the table. We've been working with their Dofasco site since 2017, so they've been kind of doing technical due diligence since then. They identified biocoal as a crucial element in their decarbonization strategy, and we're the only company that they've invested in that does that work. And they've brought not only the investment, but the offtake. So, one of our single biggest investors is our single biggest customer. So there's a nice alignment there of interests. And I think, we'll be able to continue to leverage that for, as we expand finding homes and offtake for our biocoal product.
That's awesome. Well, listen, Andrew, congratulations. I mean, like I said, you're one of the few out there that have promised certain things and delivered, and you keep surprising with some of these certainly these funding deals, and this latest deal is no different. We've been speaking with CEO Andrew White of Char Technologies, again the symbol YES on the Venture Exchange. Andrew, as always, great to catch up, and certainly look forward to more updates in the near future.
Yeah, really appreciate the opportunity. Thanks, Paul.
You got it. Thank you.